Good morning and good afternoon, everyone. Welcome to our webinar on blended finance for nature-based solutions, experiences from the Asia Natural Capital Design Funding window. So this session is for participants from North America, Europe, and Africa region. Let's start off with some housekeeping rules. So please rename yourself and mute your mic. You can raise your hand or use the chat box to ask any questions. And please turn on your camera when you're asking a question. We will be sharing the deck after the workshop, and the recording will also be uploaded on our website. So moving on to the agenda, we will start off with a brief introduction on blended finance and the Asia Natural Capital Design Funding window. We will then move to the panel discussion, where we will discuss the experiences, challenges, and lessons learned on designing and operating blended finance solutions, focusing on natural capital with our grant recipients. We have a great panel of speakers with us, whom I will be introducing later. And the last, hi. Can you please mute yourself? Yep. So the last 10 minutes of the session will be spent on Q&A. So let's start with just an introduction on Convergence. So Convergence is the global network for blended finance, and we generate blended finance data, intelligence, and deal flow to increase private sector investments in developing countries. So what is blended finance? We define blended finance as the use of catalytic capital to increase private sector investment in sustainable development. For a transaction to be considered blended, it should have three markings: return, impact, and leverage. So moving on to our design funding, Convergence awards early stage design funding grant to design innovative blended finance solutions, acknowledging the fact that solutions can be complex, time consuming, and high cost to structure and launch. We provide two types of grants: feasibility study and proof of concept. Feasibility study grants are provided to test the feasibility of a certain vehicle, and proof of concept grants are for completing all design and structuring activities to launch the vehicle. You can find all the details on our website. Moving on, we have currently 3 open design funding windows: Asia Natural Capital Design Funding window, the Indo-Pacific Design Funding window, and our recently launched Gender Responsive Climate Finance window. The focus of our webinar today would be, of course, the Asia Natural Capital Design Funding window. So moving on, the target sector for the Asia Natural Capital Design Funding window is natural capital. So the solutions can be focused on protecting biodiversity, reducing ecosystem degradation, and mitigating and adapting to climate change. The target geography is Asia, and both feasibility study and proof of concept grants are supported through the window. Our next deadline is on March 10th, and it's a rolling cycle, so we have new application cycles every 3-4 months. Moving on to the application process. So I'll just give a brief on this one. So the process starts with submitting a design funding questionnaire on our website, and then scheduling a call with the design funding team to ensure alignment. You also have the option of submitting a draft proposal, and if we receive the draft proposal 2 weeks before the deadline, we will be providing written feedback on the draft proposal. Once we receive the final proposals, the proposals go through a primary shortlisting for due diligence, and after due diligence, grant funding is awarded after we complete our compliance and after we receive our board approval. Moving on, here is a snapshot of our grant funding under the Asia Natural Capital window. So far, we have awarded 7 grants, 3 of which will be presented today in this session. From the snapshot, you can see that majority of the grants are focused in Indonesia, given the urgency of conservation effort in Indonesia, and the rest have a specific Southeast Asia focus. I will again not go into the details of the grants. All these grants are posted on our website. You can just visit our website to read up on these. With that, I would like to introduce our panelists. So first, we have Leoni. She is a technical advisor with Wildlife Conservation Society, and she'll be talking about the Bukit Barisan Selatan Landscape Fund, which is a grant recipient under our window. Next, we have Nicholas Pascal, Executive Director and Co-founder Blue Finance. He is also a recipient of the grant funding for the Blended Blue Finance Facility. Next, we have Paul Schuler, Chief Financial Officer, Fair Venture Social Forestry, one of our very newest grantees under the window for the Fair Venture Social Forestry. And we do have Aditi Gupta, our Associate Director, Design Funding and Market Acceleration Team. She will be acting as the moderator for the panel discussion. Aditi, over to you.
Thank you, Johnny, for that wonderful introduction. I will ask all of our panelists to come onto video. I can see Leoni and Johnny. Apologies, Leoni and Paul. Nicholas, are you there? Oh, I can see you as well. Wonderful. A warm welcome to all our panelists. We are delighted to have all of you with us to share your experiences. Before we jump into the panel, let me introduce myself and set the stage. I'm Aditi Gupta. I'm an Associate Director at Convergence and head our Market Acceleration and Design Funding Program. And the conversation today is specifically about natural capital and the design funding window in Asia that we have been operating for the last 2 years, focused on this topic. Now, recently at COP26 and after that, we've seen significant traction in nature-based solutions. There's been a recognition that protecting and valuing natural capital has an immense impact on climate and the world's economies. We've also seen big commitments being made for investments in nature. At the same time, we hear that the investment pipeline is not that well developed. And today, we are going to hear from our panelists about the specific financing structures for nature that they are designing with support from the Asia Natural Capital Design Funding window. On our panel today, we have panelists working on 2 green solutions and 1 blue solutions. So we'll start with the green. Paul, let me first turn to you to introduce yourself in more detail and talk about Fair Venture Social Forestry and the blended finance structure that you will be designing.
Sure, many thanks, Aditi. And also thanks to the whole Convergence team for inviting me to join as panelist for today's webinar. So I'm the CFO of Fair Venture Social Forestry, and we are developers of agroforestry and conservation land assets, with a country focus on Indonesia. We currently have 1 showcase project, which is located in central Kalimantan on the Borneo Island. And the project area spans about 3,000 hectares, of which up to 50% will be planted with timber trees and NTFP, and around 40% will be conserved. A bit of background regarding Fair Venture Social Forestry. So, how we ended up with our agroforestry and conservation business model in Indonesia. One of our co-founders has lived and worked in the project region for around 8 years in the early 2000s. So he developed a strong local network, and then he founded an NGO company named Fair Ventures Worldwide, and we are actually a spin-off of Fair Ventures Worldwide. Regarding the blended finance structure we are currently investigating. So first of all, we are in the design phase of developing an investment vehicle in order to, let's say, efficiently scale up our business model. The vehicle will most likely consist of 2 to 3 different types of investors. Most likely first loss investors, in our case, grant providers, mezzanine investors, and equity investors. We target a lifetime of the vehicle of around 15 up to 20 years. The size of the vehicle will be up to 50 million normally max. I hope that gives a bit of a background and introduction of Fair Venture Social Forestry.
Definitely, and we'll have opportunity later on to dive into the details. Leoni, let me turn to you next to talk about the work that you're doing in Indonesia.
Great, thanks Aditi. Great to be here. As introduced at the beginning, my name's Leoni and I work with the Wildlife Conservation Society. I'm one of our regional advisors for our Sustainable Landscapes program, based out of our regional office in Singapore, but working with our country programs in Indonesia and Malaysia. So we're being supported by Convergence to deliver a feasibility study to design a blended financing mechanism that has a few objectives. The first being to improve farmer livelihoods, but to do this whilst reducing deforestation and proactively protecting and restoring forests. And this combines several pieces, the first of which is the provision of loans to smallholder farmers, along with technical assistance to support a transition to sustainable production and to support those farmers to be able to repay those loans. And the third piece is funding to support forest conservation and restoration activities. And as you heard, it's called the BBS Landscape Fund, so the Bukit Barisan Selatan Landscape Fund. So we're designing and testing this model, focusing on this landscape, on the Bukit Barisan Selatan landscape, which is in southern Sumatra. But we see that the kind of issues that we're trying to address in this landscape really do play out in multiple other geographies and landscapes, both in Indonesia and globally. And specifically this sort of challenge around the fact that deforestation continues to be a major problem. And we all know kind of the urgency of that problem and we need to scale up our efforts. But that a high proportion of that deforestation, at least in some regions, is linked to smallholder farmers operating in quite complex landscapes at the forest frontier. And that more often not, those smallholders are undersupported and underbanked and yet underpin commodity sectors. So we're trying to address that kind of interplay of issues, but with a focus on this landscape in Indonesia, where the core area is about 300,000 hectares of forest of a national park, and the surrounding landscape is a core region for the production of Robusta coffee, where many farmers have really low yields, about half of what they could be, and aren't receiving kind of any inputs or extension support at the moment. But where there are multiple international companies and domestic Indonesian companies sourcing coffee from this landscape. So as I said, we're in the feasibility phase, and we're trying to design a blended financing mechanism to answer a few questions, to understand how we can increase lending to farmers in these areas to support that transition, but specifically lending that is tied to sustainable and deforestation-free practices, but also with a mechanism that can support that technical assistance and can de-risk overall engagement in the landscape by also supporting critical conservation activities within the national park. So seeing a lot of the names kind of popping up on the list, I'm excited to make some connections also after this call, because I'm sure there's probably a lot of alignment with what other people are doing and a lot that we can learn. So yeah, looking forward to the webinar. Thanks for having me.
Thank you, Leoni. And I'm personally excited to see the potential the structure you are designing has for addressing commodity-driven deforestation in different landscapes. But let me now turn to Nicholas, last but not the least, the one designing the blue financial solution here.
Okay, thank you, Aditi. I feel like I'm the old guy here around, because it has been already 2 years with you, so we already a bit more experience on the experience with Convergence grant. So hi everyone. Thank you very much, Convergence, for this invitation. I hope it will be useful for the attendees. I see many names and many friends and colleagues. So basically, we're going to present you what is doing Blue Finance and what why the Convergence grant has been really an interesting leverage for us. So Blow Finance, what do we do exactly? We manage on behalf of governments marine protected areas. So we are on the blue, as the name mentioned it. We specialize on MPS, marine protected areas, in Philippines, Indonesia, and Fiji for the Southeast Asia. But we are also working in Belize, Tanzania, and other locations worldwide. So basically, we are in the day-to-day and in the field of managing marine parks, as I mentioned, on behalf of government. So we have our own team of rangers, our own team of local management team, and so on. Why do we need blended finance? You will ask me, is that we have one specificity, is that the marine parks that we manage are what we call bankable marine parks. Okay, so they have their own business model or ways of creating their own revenues, so that they can become progressively independent from grant funding and from government funding also. That's part of the deal we have with governments when we negotiate with them. And I think here you understand why we need blended finance for this bankable MPS, because that's exactly the case of where we need to accelerate some kind of impact investment. And at the same time, this is a new asset class. This is a new field, quite green field for most of the investors. So that's why this kind of grant is always welcome and has been very efficient. Thank you.
Thank you, Nicholas. Before I continue with questions and discussions with the panelists, I do want to note for our audience that we will reserve time at the end for audience Q&A. And if you have questions for our panelists as we go along, please feel free to pop them in the chat and we will take questions as and when we can. So Paul and Leonie, let me ask you, Nicholas just mentioned why the use of blended finance was critical for driving investments into the marine protected areas. From your perspective, what role does blended finance particularly play in the financing structures you are designing, and why have you opted to go down this route?
Shall I start, Paul?
Please go ahead, Leonie, of course. Yeah.
So I guess for a few reasons, as I mentioned, there are a lot of companies sourcing from this landscape. So there's a huge amount of potential for private sector investment, kind of both from domestic finance institutions interested in investing in smallholder farmers and extending existing kind of credit programs, but also those supply chain companies who are interested in looking at the sustainability of their supply chain. But at the moment, their engagement in landscapes like this is quite risky, because the nature of it is that it's a complex forest frontier geography, and where we have the greatest potential for impact in terms of conserving biodiversity, sort of improving yields of smallholder farmers in remote areas, and having climate impacts through forest protection. Kind of the flip side of that is obviously that you have a huge amount of risk, because it's where the deforestation is happening. So that sort of catalytic early investment to provide technical assistance, to organize farmer groups, to train farmers so that they can then access loans and transition is really critical for then de-risking that later engagement. And I guess to build on that, we've found, as WCS, we've engaged in this landscape for a really, really long time, and building trust with communities and understanding the specific challenges of the farmers that we're working with. Whilst some very general, we also see that there are quite a lot of differences in different communities around the national park, and thus that kind of long-term engagement, both to build trust, but then to understand what mechanisms will work and be most effective. And long-term engagement obviously requires kind of grant financing for that. So that's why we see that this blended finance approach is so essential to the kind of work that we're doing and to what we're the problems that we're trying to address.
Great. And Paul, does that resonate with you?
Yeah, definitely. So I want to give a bit more background information regarding the legal structure of our showcase project to explain a bit better why blended financing is key for us. So in our current showcase project, we closed a 30-year cooperation contract with a local community. And the local community, represented by a cooperative entity, is the entity who got a 35-year land usage permit issued by the Indonesian government. In order to close the 30-year cooperation agreement with this entity, it takes time for us to socialize the concept. It can easily take up to 1 year before we, let's say, have a first round of discussions with local communities in order to explain our business model, until we actually have a proper legal structure in place. This 1 year time horizon, at least, of course, needs to be financed. Part of it we finance with our investor money, early stage investors, but part of it we also look for especially grant funding in order to develop the project at such a stage that a proper legal structure is in place, and we can, it in the end, it makes it a bankable project at that stage. So that's why blended finance is key for us to develop a project starting from scratch up until the moment when the contracts, the basic contracts, are signed and closed.
That's very clear, Paul. And Paul and Leonie, one of the themes that I've heard both of you talk about is the importance of community engagement and the key role that working with communities plays in the design of the financial structure. And one thing we have noted, and common for blended finance, but more so for designing financial structures for nature-based solutions, is that it requires the engagement of multiple stakeholders and really bringing them together at the table and making sure they're all moving in the same direction, while they may all have different objectives or different organizational objectives, making sure that they are all working together for the design of the financing structure. So let me ask all of you, if you can talk through the different stakeholders that you have engaged with, and perhaps highlight engagements with one or two stakeholders that have been really key for you, or that you would advise others designing solutions to start that kind of engagement early. Nicholas, maybe I can start with you this time.
Okay. I think it's a complex approach. This is the behind the scene for the investors. They don't see it. I can confess that we have thousands and thousands of emails, obviously, dealing with our marine parks and local communities. So in our case, what we do is quite standardized in each of our MPA. So when I said that Blue Finance managed marine parks, I was obviously making a shortcut. We manage it on behalf of government, but with local partners. So normally what we do is we set up a special purpose entity. This is the one that will receive the impact investment or the grant financing or other kind of blended finance instrument. And this special purpose entity is formed by local communities, local NGOs, and Blue Finance. Okay, we try to maintain it as operational as possible, reducing the number of partners, and at the same time to be sure that they align, because when maybe you don't know, but maybe when in the conservation world, mixing conservation and investment together is something new. So you have to be sure that your partners are aligned and they understand exactly that you are not a big bad shark banker, but really you're here to develop something sustainable, and you're grassrooted in communities and in science, and you just want to use financing as a way of leveraging and making things more sustainable. So obviously there's a lot of back and forth, a lot of community engagement here. Our MPAs are obviously run by 4 people organization in Philippines, 2 foundations in Indonesia, 2 NGOs in Cambodia, and that's the same pattern we have in Belize. Okay, and that's for the day-to-day management. Obviously, after, there's a lot of communication and a lot of work contracted with the fishers and with the other local communities for any kind of community development or new livelihood development for women or this kind of.
Thank you, Nicholas, for taking us behind the scenes a little bit, which sometimes, is just not available from online information, the kind of deep stakeholder engagement that is required. Paul, maybe I can turn to you next to talk about a few stakeholders that have been critical for you and that you anticipate coming along in your journey.
Sure. So first of all our activities are done in-house actually. So we have a local team of around 35 FTE who actually cover the full development cycle for any land asset we develop. What is key for us as developers is to stay very closely connected to the governments in Indonesia. So we have very regular catch-up meetings with the government to exactly understand what developments are anticipated related to the permitting schemes, for example. So what kind of developments one can expect in the short, mid, and also the long term. So I would say that is key to understand in what direction the community, let's say, important points are developing over time. That's one. Second one I want to highlight is the fact that looking at our current investor base for our showcase project, what we try to do, we try to already include a blended approach in there. So we actually have these different types of investors that we try to get on board in order to then efficiently scale up in our investment vehicle. So we currently have foundations providing the grants. We currently are close to, let's say, finalizing the first impact loan related to our showcase project. We have equity investors on board. So we try to mirror the sort of ideal investor base in our showcase project, establishing trust and a good long-standing relationship that we can then use to scale up, convincing them to potentially also join in a potential investment vehicle. So that's a bit of strategy, I would say.
Thank you, Paul. And I think you have also answered in part one of the questions that we've been receiving in chat, which is outside of grants, what are the other kind of instruments and structures key for nature-based solutions? And I think the journey you've drawn out of the importance of grants in the early stages for pipeline development, for reaching bankability, for engagement with communities as a basis for then getting different layers of equity and debt is very important. And oftentimes what we see is because the early stage is long, sometimes folks get wrapped up in the early stage, not having the eventual stage of getting private sector investment in and really making these solutions bankable. Leoni, let me turn to you next to talk about stakeholder engagement and also a little bit about the kinds of investors or instruments that you may expect at the end of your design journey.
Sure. So the project that we're working in, the landscape that we're working in, we've developed a landscape partnership which involves government, private sector, and communities. I guess to echo what Nicholas said, that sounds quite easy and good on paper, but obviously in reality that's the overall partnership framework. But to make that work, it requires very intensive then one-to-one engagement as well, and finding particular champions within that partnership that we can work with to really take this forward, both on the kind of government and private sector side. So on the government side, we work very closely with the National Park Authority itself. That sort of WCS is focused in the landscape, and we have an MOU with the Ministry of Environment and Forestry. So we coordinate very closely with them and ensure that what we're doing is really aligned with their kind of overall management plans and work plans and priorities. I guess in terms of our then priorities, in terms of stakeholders to engage to really make sure this works, it has to be at the community level and with farmers, like I mentioned. We've been active kind of implementing and engaging and training farmers for about 3 years now. And we initially designed in the kind of pre-feasibility phase a model with quite a number of assumptions around the kinds of loans farmers would take, the scale of those loans, the suggested uses of those loans, and the cash flow model that farmers have in reality that could make this then overall structure work. And I guess at this point, we're still now engaging farmers to now to retest those assumptions and to understand what works. So I think that has to sort of engagement at the community level and with farmers has to be like front and center of everything we're doing. Otherwise, what we're trying to do won't work, like won't improve farmer livelihoods, but also won't address this really complex problem around deforestation and smallholder encroachment. In terms of the kinds of structures and kinds of mechanisms we're testing, we're working with, and this is, you know, all supported by this in this feasibility study phase, to engage a lot of local financial institutions in Indonesia to understand whether there are existing credit enhancement mechanisms in place that we can already use. And so we're still figuring out whether there are mechanisms that we can directly apply, but with supporting monitoring in particular, because a lot of those existing mechanisms do already have requirements around legality and sustainability, but they're not necessarily hugely well communicated, and then there aren't the supporting monitoring systems in place. So that's sort of one option, is that we could utilize those existing mechanisms, but then use sort of the additional kind of grant investment to create that monitoring approach to ensure that they're having the right impact. And I guess as you know, compared to others on the call, we are at sort of slightly earlier stages in understanding how this all fits together, and how, for example, investment in those sort of technical assistance and conservation activities can then directly de-risk then the commercial investments in smallholder farmers. So we're still quite early on in our journey of figuring out exactly what that looks like. But I did see a question around the sort of potential for impact investment and impact bonds. And one of our partners on this is Conservation Capital, who have developed a rhino impact bond. And we've sort of been exploring whether a similar approach could work, but looking at kind of tiger population numbers within the national park or deforestation rates. So a lot left for us to explore still. But that's sort of a general view of where we are and the kind of stakeholders that we're engaging, with a particular focus, like I said, on at the farmer and community level.
Great. Paul and Nicholas, maybe I will ask you the follow-up that Leonie just responded to. We have a question from the audience on exploring outcome-based financing and things like impact bonds. Is that something that you have considered in your design journey yet?
Yes, definitely. So we are actually currently working on structuring an impact loan, whereby the KPIs are linked to the carbon storage of our planting activities, the local employment we provide to the communities, but also to our local Indonesian colleagues, and gender equality. And based on the, let's say, scores on those KPIs, the interest rate can range between 0 and 8%, for example. So yes, definitely, we see a huge potential in the field of impact loans, definitely, yes.
Nicholas, you may be on mute.
I'm still on mute, sorry. Yeah, from our side, it's more, my conviction is more keep it simple and straight. Impact bonds are good. I think they're interesting. We need to find the right investors, the right off-takers. So there's a complexity in the setup, in the off-taker for the final purchaser. You have complexity in the KPI. So you're adding one more layer of complexity. I think it's interesting, but not really today at the scale of what we're looking for and at the timeline that we're looking for. So from our side, we have already closed 2 deals in the Caribbean, summing more or less $3 million US in a blended finance with a mix of impact loan, with performance grants and classic catalytic philanthropy grants. In Philippines, that's where Convergence grant has been really helpful. So we were more or less like Paul and Leonie, maybe 1.5 years ago, 1.5 years ago, on this developing approach in Philippines. And today we have, and normally in January, February, we should be able to close another blended finance solution for Philippines, approx $2.2 million US. mixing again impact loan from impact investors with some kind of performance loan, meaning that the interest rate will be decreasing if we perform. So you can call it performance bond if you want, and mixed with classic grants and catalytic funding. So that's part of it. We try to keep it to these instruments. For the moment, there's no equity because we are only dealing as non-profit. There's nothing like any shareholders in between. We're running marine parks, as Leoni mentioned. We're working very closely with government. This is on behalf of government. So obviously there's no profit sharing or dividends. So everything has to be more oriented to debt instrument, and that's it.
Thanks, Nicholas. And I think you touched on a very important point, which is complexity of these financial instruments. And oftentimes when looking at blended finance approaches, it is very tempting to, at the outset, use multiple de-risking instruments combined with grants and bonds. But I think one of the lessons learned across the board is that the more number of instruments you add, the more complexity you are adding, and you really have to do an analysis to see whether it's worth adding that additional complexity. And on the question of impact bonds specifically, I think I want to draw for the audience what Paul and Nicholas shared is that you don't necessarily need to think of it as impact bonds or outcome-based financing and in the more traditional sense. But what we're really seeing is a rise in debt products and loan products that are impact linked. And they may have KPIs, they may have interest rate fluctuations, the term of the loan may change. So that is one of the ways in which you can bake impact into the deals for nature-based solutions, but reduce the complexity. I do want to remind the audience that we're going to open up for audience Q&A soon, and I've already seen a few questions coming in, so please feel free to keep that coming. Let me ask all of you now if there is a lesson learned or two lessons learned that you would like to share with the audience. And I recognize that you're all on different stages of the journey on launching these nature-based solutions. But let's talk a little bit about lessons learned. Opening it up to any of you who would like to start.
Perhaps I can quickly kick it off. My experience, so let's say our experience as FSF so far, is that it's extremely important and key to be just clear and upfront whenever you talk to a potential investor regarding, let's say payback times, and just be clear and transparent at the beginning. Otherwise, you may start a process while it has not much potential. I mean, if I look at the business model of FSF, the cash flows are relatively backloaded. It takes 9 to 10 years. The payback time takes up 9 to 10 years. So we need patient capital to invest in our business. And if that is not clearly communicated at the beginning of any sort of investigation process with a potential investor, it's just very inefficient and frustrating. So my advice would be clear, transparent from the beginning, and then also test a bit what kind of, let's say, high-level return figures are being targeted, and see if there's potential to meet each other somewhere or not. If not, then just stop the process and don't waste too much time. That would be my advice.
That's very good advice, Paul, on investor engagement and testing out the investors and doing market sounding early on. Leoni, Nicholas, I'll turn to one of you next.
Sure, I can provide some of our kind of early lessons. I guess some of them reinforce like our previous understanding of what the challenges are going to be around like different stakeholder motivations and what that means for implementation, and in particular this kind of appetite for scale and kind of unrealistic expectations on what scale can be reached, both in terms of investors interested in impact. There's a there's always a sort of push for us to be working with thousands and thousands of farmers from the outset and across the whole national park. And in terms of how you build something that's effective, that's obviously really, really hard to do. And both in terms of those existing loan products that I mentioned, there's a desire for scale there as well, but under a business as usual type approach. So I guess that's almost reinforced our focus on developing a proof of concept and having really strong engagement with farmers and understanding what the best models for technical assistance and what kinds of loans will work. And as I said earlier, having champion stakeholders that can help us to do that, particularly in this context on the company side. So we've been working closely with Olam and Louis Dreyfus Company, who have been quite engaged since the outset, but are now really interested in looking at how their supply chains and sourcing with support also from their downstream buyers can support what we're doing. And I think that's going to be really like catalytic for us in developing a model that really works. And I guess underpinning all of that is the importance then of having really robust monitoring approaches from the outset, because even without a sort of complex finance structure to de-risk those companies' engagement, us having the assurances in place and being able to provide data on what's going on in the landscape, I guess both positive and negative sometimes, is really important. So that monitoring piece continues to be a major priority that we see as needing kind of continued support to enable companies' engagement, but also enable the mechanism to have the impact that we want to see.
Thank you. And Nicholas, what about you?
There are many aspects. I think I will try to choose the one that may be interesting for your audience in terms of applying for a grant with you. I think here the concept and what is a recommendation is, if you're really in a proof of concept stage, it can be quite hard to prove your model. And I think having a support like Convergence that really is in the business of blended finance is really useful. Okay, let's be clear from our side. When we deal with marine conservation, normally we deal 95% of any kind of marine conservation initiative deal with grants. Okay, what we're doing as Blue Finance is quite new. I think we are not the only ones, but not a lot of them. Others are doing this blended finance for marine conservation. So today now seems okay, seems straightforward. Yeah, we have impact investors behind, we blended it, we have other partners coming from. So it seems easier. But 3 or 4 years ago, even pre-COVID, creating business models around marine protected areas, being rooted in science, doing good impact on conservation and on communities and protecting our coral reefs. I'm a marine scientist. I've been working also as an investment banker, but most of the team is also coming from science. So we have some issues in really fine-tuning what is really the blended finance useful for. And I think there's one question from Avril, from Jeff, asking why do we need blended finance? I mean, at the end, grants can be, especially coming from a Jeff, they should be directly on this. I mean, there are several aspects that are so important about blended finance. I would say, first of all, grants can be everywhere. We have only on the marine side more than 20,000 MPAs. 90% of them are paper parks. So we need to be more creative, obviously, than grant. The second one is that even for some of our MPAs that would have been financed from philanthropic part, we normally our ticket investment is $1 to $2 million US per MPA. I would have said no. Why? Why are you taking a loan and you have to pay back and finance? Because this brings a lot of financial discipline into marine conservation, into NGOs, into a whole team, which will build capacities to become financially sustainable. It's not about paying back the investor. I mean, that's obviously that's part of the game, but it's more of creating our own revenues. And after this, we will become progressively independent from grant funding and from government. Obviously, we will have other issues with market, with depending on ecotourism, on blue carbon, on different revenue models. Each one has its own pitfalls, but at least we're creating a new model independent from grants. This is not for all MPAs in the world, but at least for the part that we are managing, that's part of it. So to summarize, I think having Convergence as an early stage partner for this kind of innovative approach was key. It took us a lot. It took us some time. I remember discussions and like 6 months in fine-tuning our agreement and finding the right role for convergence and things like this. But we did it, and that was 2 years ago. I'm very glad of this collaboration.
Thank you, Nicolas. I'm going to ask all the panelists one final question before turning to our audience questions. And which is, in the design and structuring journey, did you come across any barrier or opportunity that you may not have anticipated at the outset? We often see concepts that come to us for feasibility study or proof of concept change quite a bit by the time they actually launch. So I would like to ask all of you if there's something that has come up for you that you did not anticipate, maybe even before approaching Convergence. Leonie, I see you shaking your head, so maybe I'll start with you.
It's nodding, not shaking. I guess to just pick two, I think one opportunity that's come up that we didn't foresee, despite having had some engagement with them first, was with one of the district governments that is bordering the national park. There are 3 core districts, but one of them, Robusta coffee, is essential to the kind of district economy and their focal commodity. And they have been very supportive, developing a conservation partnership agreement with the national park. And so there's some really strong political will there already. But since then, and as we've been exploring the mechanisms that we could use, they've also now have an MOU with one of the domestic banks and is looking at farmer financing mechanisms that we could then build on. So could present an opportunity where we can directly align with and support a government mechanism, which obviously could give this some real support and then long-term impact by embedding in that policy framework. That said, it does present some coordination challenges, especially given our different motivations when it comes to why they want to do that versus our focus on conditional finance and deforestation-free agriculture in the national park. But it is an opportunity nonetheless. Another, I guess, a major barrier when thinking about the overall fund mechanism and increasing funding for that final piece of that I mentioned around funding for conservation and restoration within the national park, that the policy framework that enables funding to flow from a fund to a national park authority itself isn't really there. And so there are workarounds that we'd have to do to make sure that any funding could directly support national park activities and provide that sort of proactive conservation support. There are things that we could do. There are other parts of Indonesia where I think there are similar approaches, and so there must be workarounds. But currently with the National Park Authority that we're working with, that sort of feels like a barrier at the moment that we need to overcome.
Thank you for sharing those. Paul, what about you?
Yeah, of course, for us, it's still very early stage. But let's say our first experience would be, I mean, in an early phase, keep the structure as flexible as possible. So there's always a risk to start over engineering at the beginning. And then it may just hinder very interesting, useful discussions with potential investors. So don't over-engineer from the beginning, keep it flexible, and then build from a sort of lean starting point, try to build on, and then the complexity will come later, I would say.
Nicolas?
Okay, no, so no challenge at all. That was piece of cake. I'm kidding. No, I mean, there's. If I have to pick up one, I would say one interesting challenge has been with grant makers. We would have thought that they will jump onto the board quite easily, because bringing a bankable MPA, bringing a long-term agreement with government, with a PPP, and bringing some fresh money from impact investors, you would have thought that most of the grantors would like this and would be interested. But most of them are very shy with impact investment, are very shy with blended finance, they're very shy also in consolidating approaches. meaning that they want to specialize in only one MPA. They don't want to aggregate also. So there are several challenges from every side when we create new mechanism. But I think we're going on the right direction on both creating new model for social enterprise and new model for impact investment. So great.
Thank you. And let me now turn to some of the audience questions. One of the questions we've received for any of you is, are there examples of other projects that you have been inspired by in your journey? And they don't have to be in the blended finance space, but if yes, that's great.
Okay, I still have a mic. So yeah, from our side, we have one very big model, which is African Power Networks, running 20 or 20 protected areas in Africa on a very similar approach, PPP, a long-term public and private partnership, and a whole delegation of the management. They don't use blended finance at all. So we knew for this.
I can go quickly. I mean, there's a lot, and I think that's one of the challenges that we've had, is that the kind of sustainable production and supply chain space and company involvement in that, landscape partnerships, financing for that, there's a lot going on, which can be quite hard to pick through, to understand what the best approaches might be, what we can replicate, what won't apply. So whilst very inspiring, it can be quite overwhelming to think about, like, which pieces of all of those things can we replicate and learn from. And I guess that's sort of a general reflection on the space, is like, how do we get better at communicating the things that have been really hard, to avoid that, because often we have to constantly talk about the successes when there are, in many of our projects, there are failures, and that's what makes them stronger. So I guess that's just an overall reflection. But also, and not just saying this because she's on the call, but we've been very interested before in what PEMPEM are doing in the palm oil sector, looking at smallholder financing in that sector. And we've been chatting separately and to set up a call to follow up on that. But I think that provides a really nice model and interesting example that we can think about replicating, to make sure that we're not reinventing the wheel. But there are others also.
Thank you. Paul, any that come to your mind? If not, we can move through the audience questions.
Yeah, please go ahead and let's move to the Q&A, Aditi.
Yeah,
sure.
Let's do that. In the interest of time, what I'm going to do is take a couple of questions together and then open it up to all three of you to answer whichever you'd feel like. So two interesting questions. One is if there are any lessons learned specifically on using grants or guarantees to attract private sector financing. And related to attracting private sector financing, another question is, how can investment in the environment improve attracting private sector financing and private investments?
I guess that final piece is something that we're really interested in exploring, is exactly that. How do direct investments in conservation de-risk private sector engagement? And that's certainly, through the companies that we've been talking to, very attractive to them. You know, they don't have necessarily the mechanisms or maybe support within the company to support those kinds of activities. But if we can prove that we are increasing kind of technical assistance, but also grant finance directly into conservation within the context of their supply chain investments, and how they meet their sustainability commitments, we see that as a key part of what we're doing, and very interesting to the companies that I mentioned, many of whom now have kind of forest positive commitments, net positive commitments, and don't necessarily, particularly in the smallholder space, have mechanisms in place to achieve those. So we think this sort of blended financing approach and that direct support for conservation is absolutely critical if companies are going to meet that, but they need the structures in place so that they can show how their supply chain investments are linked to that conservation impact.
Thanks, Leonie. Paul, Nicholas, any additional reflections on this point?
Paul? Okay. Well, I can do it.
Please go ahead. Please go ahead, Nicholas.
Okay. Now, very briefly with grants, I think it's very case specific, and you have very different kind of grants. So in some cases, what we try to do is really to work at the scale of one project, one MPA, and we blend the finance with the impact investors. Okay, so we bring some grants that are, for example, directed to some specific equipment or scientific or resource for the MPA, so much more about enforcement, surveillance, and not related to creating revenues. So we keep the money from the impact loan more for revenue generation, like for example, investing in a visitor center or investing in an ecotourism facility or investing in a blue carbon project. So that's the kind of thing. But I repeat, that's very specific to each grant I don't know. I think maybe in 5 years we can redo a call like this and make a feedback on which one is more complex to get the money from, impact investors or grant makers, because all of them have a lot of rules, you know, and you have to follow them. So unfortunately, that's one issue we have on how MPS is that a lot of the grants are there. There's a lot of grants available, but they're very much directed from a top-down approach. So if you want to have some grant from one a foundation, you have to do, I don't know, seaweed, but we don't do seaweed in our MPA. So maybe you can start doing seaweed. Yes, we can, but we're diverting our effort in doing something that was not planned. So, you know, the grants are good. Obviously, you have to pay back, but they bring you also a lot of diversion sometimes. They bring you a lot of also time consuming to report and to give a feedback, which is normal. Huh? This is grant money. If I was giving my money, I would like to be sure that they have a proper impact. So I'm not criticizing any system. Huh? I'm just telling you that there's no easy system in between. And we have to deal with complexity of both. And hopefully the blended will simplify. Will not be like, you know, when you have children, you say 1 + 1 is not 2, it's like 1.5. Maybe mixing debt and grant will not be 2, will be 1.5 on the scale of effort. We will see.
Nicholas, I have to say that's a very positive note to end the panel on, that blending can make 1 + 1 3, hopefully, not even 2.5. And with that, let me once again thank Paul, Leonie, and Nicholas for taking time out to share their experiences with us. We've had amazing audience participation. I realize we haven't gotten to all the questions, but I hope this is just the start of the conversation and not the end. Please feel free to reach out to Convergence or any of the panelists to continue the conversation and learn more about their experiences. We will be sharing the deck with all of those who have attended and registered for the session. And the Asia National Capital Design Funding window is open to applications. So if you'd like to have a conversation, once again, please reach out. And thanks a lot to everyone who has attended.
Thank you.